Hello, traders. James Stanley with StoneX and Forex.com. It was a comeback kind of week for the US dollar, and that continued a recovery move that had built from the January lows. With that said, as we go into the weekend, and I'm recording this on Friday afternoon, it's going to be published on Monday morning, there is a very unpredictable and unquantifiable factor that is likely to hit and impact the US dollar, and that is President Trump and his response to the Supreme Court shooting down his tariffs. Now, Trump has had in his back pocket an incredible pull on markets with his ability to push volatility in really either direction on the basis of tariffs. And as we go into the weekend, I doubt that he's just going to take the loss from the Supreme Court without having some type of response for what he thinks might push the envelope forward. That said, I think it could have a more profound impact on equities and other risk assets, but it's undeniable that this could also bring a dollar impact as well. That said, I'm still of the mind that the bigger matter for USD is the dollar yen carry trade. I think that's something that has had impact over the past few weeks. I think it's something that still carries some impact. And I think dollar yen coming back to life is a big part of why the dollar rallied last week. So I want to dice through that. I want to look at USD strategy for the week ahead. I want to do this by looking at euro dollar, pound dollar, dollar yen, dollar CAD. Also to take a look at gold. So let's get to it and start devising some strategy. All right, so first and foremost, in the dollar, we have a really big level that's back in play. This is a weekly chart, so we're looking at a good amount of data. But if we scroll out, it's the 38.2 retracement from the 2008 to 2022 major move. That came into play last April to soften the sell-off. And this ultimately is what started to reject bears, right? Sellers were still driving in June and into the second half of the year, but they weren't getting very far. That support became resistance. And then on a more granular basis, this was like a launch point in October that finally got us that retest of 100. It was the last swing low before we rallied into a lower high in early January. And for 2 of the past 3 weeks, this is what has held bulls back. You'll notice this week we got slightly higher above that, so it's a slightly higher high. But, really, this is just that continued recovery from the deep oversold condition that we had seen in late January. Now, if we draw back to why that developed, there's a couple of drivers behind that. Covered that in these videos. On that day, on Tuesday, January 27th, Trump was directly asked, what do you think of USD weakness? And he said, it's great. And so that's almost like it kind of cheered it on. It showed that the admin wanted a weaker USD. And I think that the knock-on effect of that was that it delivered some type of probability that maybe the admin, specifically the Treasury Department and maybe even the Fed, had assisted with a round of intervention in dollar yen. That, however, was refuted a day later. And then Scott Bessent also had some comments speaking positively about a strong dollar. And then that's what helped to bring the dollar back to life. And then this Friday, we had a comment from Kevin Hassett, also speaking on a strong dollar policy. And then we had the reversal in play. But as we came into a couple of weeks ago, if you were following dollar yen, it was widely expected that a Sine Takeichi win in snap elections was going to lead to a stronger spot value in dollar yen. And you can see where dollar yen came back to life quite well on the basis of that expectation, even rallied into that weekend. And then as we went into the weekend election, wide expectations that was going to lead to a breakout. We even saw an initial run of strength on the open that day. And Takeichi, her LDP party, the minor coalition that she had, they won. They did really well. And you could see where dollar yen did exactly what many were thinking, at least initially, and then it turned around aggressively and then started to go the other direction. The USD basket mirrored this theme quite well. And as we saw dollar yen tanking after an LDP and a Takeichi win, bears were very much taken over. This was an NFP report, and again, it came out pretty positive. We had a beat on the headline number, higher than expected average hourly earnings, better than expected unemployment rate. All in all, it was a good report. Initially, we saw a quick run of strength. Once again, it was slammed. So it almost seems as though if there was an intervention, and this is just my opinion on it, if there was an intervention, it was in here and not necessarily in here. I think what we saw here was position squaring. The BOJ talked up the possibility of another rate hike. See where we had that initial shock, but it bounced into the U.S. session. It was when the U.S. opened that this thing really started to tank, and I think this was from longs, either from hedges on the carry or straight up longs, cutting bait on the basis of possible convergence in rate policy. But what we saw here, I mean, if and I've said this a couple of times in different ways, but if I'm at the BOJ or if I'm Ministry of, at the Ministry of Finance and I want to get the most bang for my buck on intervention, and we're going into the weekend with an election where it's highly expected to go into Keiichi's favor, and you could see the way the dollar yen had responded to her win back in October, it's almost like you know that you're dealing with a problem if you don't tamp on that move. And if I'm at the finance ministry, if I'm at the BOJ, if I'm looking to get the most bang for my buck in intervention, that's where I'm jumping in. Not necessarily right here. Well, regardless of what drove it, it's the price level that came into play right here at 152.50, and then that's what led to recovery this week or the most recent week. And you'll see that we're right at that 155 level, closed essentially with indecision, closed with the doji. This is not something I want to look to get long in front of. I mean, because you can see where this big bullish candle softens the next day, and then we go into indecision. It looks like this wants to pull back a bit. But if you look at this shorter term, there is scope for bulls to make a run. We need to see a hold of support either at 154.45 or this 153.67 level. 153.67, this was range resistance. Looked at this in the Tuesday webinar. If we get a deeper pullback, a hold of support there, doors open for buyers to make a run. 154.45 would be the more ideal level for bulls to hold. This is a price that's been in play numerous times. This was resistance back in October, support in December again, then resistance more recently, and this is support potential on a deeper pullback. And so I know as we go into next week, all the attention is going to be on Trump, all the attention is going to be on tariffs. I think this is a bigger matter for USD and in turn, other dollar pairs. And I'll explain as we go along. But getting back to USD, what I'm looking at here is I have an ascending triangle formation. This is a bullish breakout formation. The horizontal resistance at 97.94, that is the level that buyers ultimately need to take out. Whether they do or not, I think it's going to drive back to that dollar yen argument, and there's probably even some of the dynamics around Trump and tariffs that could play into that as well, although I still think that dollar yen and that bigger picture carry-on line is a bigger factor. But you can see here on the 4-hour where this formation is built fairly well. We had the oversold backdrop back in January, hit of resistance, higher low, hit of resistance, so far higher lows. I'm watching this zone 97.33, 97.46 for bulls to come in to support a deeper pullback type of scenario or setup. On the resistance side, the next level I'm looking to come into play is right here on 98.73, after which there's a spot around 99.50 right in here. This was a group of resistance points back in October. It came back into play back in like mid-January. But really, if we're looking at the dollar, this is a level I was talking about last quarter. It's right around that 100 spot in DXY. 100 spot 22 was the lows in 2024. And this came in twice, setting a beautiful double top that filled, broke, and it essentially caught a reversal thereafter. That is a major, major spot. But for that to break, I think we would need to see dollar yen well above 160. We would need to basically see the Ministry of Finance losing control a bit, which I don't know that I want to build that expectation in right now. That said, if I'm looking for USD weakness, if I'm looking for this ascending triangle to fail, if I'm looking for the dollar to break through that support, I think there are more amenable passers elsewhere. Euro dollar. And this is why I make that claim that I think dollar yen is doing a larger portion of the push. If we draw back to this period here, Q3 of 2024, this wasn't a great economic period for the Eurozone. Like, there wasn't a massive reason for this rally. It really seemed to be just more derivative of dollar yen carry unwind, which was a very loud theme in July of 2024. But you can see where that USD weakness that was coming out of dollar yen was also impacting euro dollar as well, propelling the pair up to that 112 handle. And then, lo and behold, dollar yen comes back to life in Q4. So too does dollar strength against the euro, leading to 1,000+ pip sell-off. More recently, however, it's the 120 figure, and we could see the way that late January breakdown in the dollar amounted to a significant breakout here in euro-dollar. Look how overbought that got on the daily chart, all the way up at 77.65. That is rare. This reading, 75, didn't quite get up that high. To get a 77.65 read or a 77 or higher read, we got to go way back in euro-dollar. It's not something that happens all that frequently here on the daily chart. Yeah, we're looking like back in 2020, more or less. Nonetheless, move couldn't sustain. Pullback begins, and as we saw the dollar come back to life off of those lows, initially it was a fast run here in the euro, and it's slowed more recently, which is what has allowed for the build of this falling this falling wedge formation. Falling wedges are bullish breakout formations because we're not seeing sellers stretch at lows. This is often indicative of a spot of support coming into play. You can see that support being anticipated right here and then right here, because we get down and we get closer to that support and sellers all of a sudden get uninterested, and then we get a bit of a bounce. They're still active at highs or pullbacks or near resistance, but as we get closer to that support again, they kind of lose interest. The support that's in play is a big spot. This is a Fibonacci retracement from the 2021 to 2022 major move. I've been talking about this for years now. The 618 is what caught the 2023 high. The 38.2 and the 50 helped to define a range for a good portion of 2024. Last year, the 23.6 is what caught the low at the 102 handle. More recently, though, it's been the 764, 786 that has just been a game stopper for bulls. And 117.48 is the 786 retracement of that major move. This is what came into play this week. This is what set the low this week on two separate occasions. It's still too early to call this a bottom or a low, but you can see where that impact, that effect plays into the formation. And this is why that formation is often tracked for bullish reversal potential. So for this to play, what we're going to need to see is, first and foremost, we need to see a break of that level, 118.05, 118.04. Support turned to resistance. This was the spot that held bulls back on Friday. We get a break above that, then we have the trend line in play, then we have 118.37 in play. And then if we get that break, we can start to make the claim of shorter term higher highs and higher lows, and that opens the door for retest 119.09, 119.19. I think 120 could still be a problem here for now. And, again, like in dollar yen and USD, if we're going to build that probability of that expectation, what is it going to take to produce that? If we're going to see a 120 plus break in euro dollar, I think we're essentially going to need to see dollar yen fold over. I think we're going to see dollar yen approach 152, maybe even take out 152, and then ultimately probably even take out 150. So what produces that? I don't know. But if we are looking at Trump to really ramp up the tariff drama, that might be something to entertain. On the other side of the matter, if we're looking at, well, let's go to this one first, on pound dollar. This is another setup that I have on the side of USD weakness for now. Maybe not as clean as euro because I don't have support as well defined here, but you can see these falling wedges. Here was a falling wedge that had built back in January off the daily chart. It broke out in a very big way. We have another falling wedge that's building right now, hasn't broken out yet. For this one to break out, this level is of note. That's like 35.68, but it's the 135 handle the bulls gave up this week. That's why I'd be a little less optimistic here than euro dollar, because we did see that 135 lead into a bounce. It even had a bounce on Tuesday, and sellers have just grinded through that so far in the remainder of the week. If we get above that, we could start to maybe get a bit more optimistic, right? Similar backdrop as euro, support into resistance. We get a break above that, then we can start to say, all right, well, we got higher highs, higher lows on the floor. Maybe this is something that could dance with that breakout on the daily. But 35.68 still a pivotal price. 36.23, I'm going to call that 36.25. And longer term, bigger picture, this is a big spot of resistance here in cable that it just couldn't do much above when we tested that trend line just a few weeks ago. But this is another one that I have on the short side of the dollar if we do see that dollar breakdown thesis take hold next week. On the long side of the dollar CAD. So, again, looking at dollar yen, I think if we are going to see a dollar breakout, it's going to need some participation from dollar yen. We're going to need to see that pair get closer to that 160 level. And even then, I think there's a bit of drama there because I think at the very least that we get at least one or two shots of defense from the finance ministry in the form of intervention. So I wouldn't expect it to be a smooth ride at all. But if we're looking for USD strength, I think this is a cleaner backdrop right now. And the weekly chart, I think, tells that story quite well. For the past decade plus, this has been a mean reverting pair within a range. And these psychological levels have had a tendency to show several inflections, like 120, 125, 130, 135. Now, it doesn't catch every low. It's not perfect. Of late, these have been a little closer to perfect than what one might expect. But you could see where we had that dig into 135 in late January when you had that oversold USD, and then we had a higher low last week, and that so far has continued. So, at this point, we can't quite call this bullish because all that we've had is a cessation of selling strength. But often the first kind of few steps of a bullish reversal is a slowing and selling, hence the falling wedges that we just looked at in euro dollar and pound dollar. But if I'm looking for dollar strength, this is still a backdrop that I think is a little bit cleaner. And you can see where the higher low played. We need a higher high next. 37.27 is a massive price. That was a double bottom formation last year. Broke out, led to a fresh high. That since came back as support. We have another level a little bit higher, 39.25. So in like top end rally setups, that's what I'm looking to come into play ultimately at some point. But 38, right around the 138 handle would be the next objective for resistance if we do get the break. For support, for higher low support, we saw this play on a shorter term basis earlier this week in a pretty clean manner. But you can see where we stalled out just ahead of that 36.27 level. If we do get 37.27 level, excuse me, if we do get a deeper pullback, that's what I want to see hold to constitute a higher low. Looking for the breakout, looking for the run into like 38, and then maybe even a little bit deeper towards that 39.25 level. All right, last but certainly not least, gold. Now, I want to look at gold because this seems to be like non-correlated with a lot of the USD markets that we have right now. But this is a setup, a market that I've been following really closely for the past couple of years. And we just celebrated the 2-year anniversary of when the rally began. And I have this one in an ascending triangle formation as well. The story here, I think, is best told from like the weekly chart. So let's go out a little bit longer term. And we can see very clearly where along the way, since the breakout began 2 years ago, there have been a couple of very clear cases of consolidation, right? And this is just like textbook trend, consolidate, trend, consolidate, trend, consolidate. It hasn't reversed, really. It's just consolidated. And I mean, it's very clear here off the weekly where we're still in that case of consolidation. Wide upper wick. Sellers have an open door to slam this. Instead, buyers take advantage of the pullback, drive it right back up. It's been what's happened over the past 2 weeks that I think is most encouraging. And then you look at this a little bit shorter term, and we have a similar build of a bullish formation. That's an ascending triangle. Horizontal resistance, excuse me, right at the 5,100 level, this prior resistance turned support back into resistance again. And as we worked into the close, price drove right into that. So the breakout is set up as we go into next week. It's a little bit tenuous given where we're at or where we closed after this week. But with that said, that's the big item. We had a pullback earlier in the session around when the news about Trump's tariffs getting knocked back by the Supreme Court. Bulls came in a very big way to defend 5K, and then it went parabolic thereafter. At this point, I would even accept another pullback and retest of 5K flat, but I think ideally we would see bulls step in a bit early, right around that 50.22 level. Another level I've been using was right back over here, right around 50.46. Right, so that's S1, that's S2, that's S3. Maybe even color S3 down to 49.71 if you want to give it a little bit more wiggle room. But this is the one that I like most of everything that I've looked at over these setups for USD next week. But that's an ascending triangle, very similar to what's set up in USD, albeit with a different format, different backdrop, whole different setup. But that, my friends, is what I'm looking at for next week. As always, thank you for your time and happy trading, ladies and gentlemen.